We're sticking with cattle as we head into this week's market segment. Last month's cattle inventory report showed that cattle numbers are flattening out. Also, with lower acres, feed costs are still a concern. And what can we expect in the markets as we edge closer to Labor Day, the last big beef holiday of the year? On Tuesday, I spoke with Mike Briggs over at Briggs Feed Yard in Seward. I started off by asking if this summer has thrown any curveballs his way.
The summer market has been pretty much what we've expected. The weather's been better than probably usual. We talked about that earlier. You had one little bad stretch in there, and the summer's been pretty easy to take, which, as far as I'm concerned, we deserve that after the winter and the spring that we had. But marketing's been kind of what we thought. We are in a really good situation, especially in eastern Nebraska. Fundamentally wise, we're very current. You can see that in the weights. The weights are below the last couple years. So we're doing a good job moving cattle through the system, which tells you that demand is good. And you always want that. So I think as a whole, we've done really well. And I think as we go forward here, we're going to be in pretty good shape.
And then there was the inventory report from last month, and that signaled that we may be topping out as far as expansion goes. Is that what you're seeing?
Yeah, I think very much so. That's been pretty easy to see if you looked at the cow kills and things like that. Plus, nobody's really accounted for the losses from the winter with the calf losses that we've had. So that's going to be interesting as we go forward. I think you're going to see your cattle on feeds ratchet down. I know they're already much lower than we thought they would be. Once again, we're putting less pounds on the market, so I think that's really helping us. I think the market as a whole is in pretty good shape now. We're ramping up right now into that time where we have pretty good demand going into Labor Day, which is your last big beef holiday of the year. Then we struggle and stumble a little bit after that, and I think we'll stumble a little bit after that this year. I just don't think it's going to get as bad as it has the last few years. Then when we get towards the fourth quarter, towards the end of the fourth quarter and into the first, you're going to see a pretty dramatic drop in your on-feed numbers and your cattle ready for market numbers. I think that really helps us as we go forward.
Of course, feed prices, a lot of folks saying that's an issue. You guys been feeling that too?
Yeah, you know, the corn thing got a little exciting there for a little bit, and as far as I'm concerned, this corn thing is real. Now, you sit here in southeast Nebraska and everything looks awesome, but I know in talking to customers from Illinois and talking to people around, this crop is not good. I think we're finally going to find that out on the August 12th crop report, and I'm afraid we're going to get a rude awakening. Now, maybe I'm wrong. Maybe the acres are going to be there. I don't think so. And we've got a long time for this crop's going to be done. You know, it's August now. Usually you're kind of start winding down, thinking about, oh, we're going to be cutting silage here in a few weeks. No, you're not. We're a good 30 days out from that. And you're 30 days from, and 45 to 60 days from corn harvest. So I think there's still a lot of things facing us as far as feed prices right now.
As for margins in the feedlot, what are we seeing?
Well, we're finally starting to get in the black. I've seen it in my performance. Now most of the cattle that lived through the entire winter, those cattle are harvested and gone. The performance was horrible. Those cattle lost money. Break-evens were way higher than projected. That was really tough. Now we're getting into the cattle that came in after the first of the year. They still lived through part of the winter, but they were on the tail end of it. Performance has started to increase dramatically, and therefore my cost of gains are better and our break-evens are better. So a guy can make a little money here depending on how you had them protected. But once again, I think after we get this Labor Day demand kind of satisfied, I'm afraid we might stumble a little bit, but we'll see.
So one positive, looks like range and pasture conditions have been awesome.
That's been really good, and that's going to have an effect on your on-feed numbers, because with high-priced grain, high-priced feed, people are going to leave those cattle out there absolutely as long as they can. So that's going to mix up your marketing numbers a little bit, which I still think are going to be bullish for us. It's going to get us away from this supply, so it's not just a constant slog of cattle. Get us away from this and get us into next year where things are going to be a little bit better.
So as far as supply, how do you think that's going to impact prices over the next few months?
Well, once again, I think we're going to run into a little bit of a supply issue after we get out of Labor Day, but I don't think it's going to last very long. I'd sure like to see something get taken care of with this trade situation, so maybe we could see some export demand to help take some of that extra product supply out of there. But hopefully we'll just continue along with our demand. I know every year that Christmas, that holiday demand for ribs keeps coming a little earlier, a little earlier, a little earlier. So September, October would be a good time for that demand to start pulling pulling some of that supply away. But I think we're in good shape. I think if I was a restaurant owner, a restaurateur, I'd be looking to lock my stuff in for a period of time now, because I don't think beef's going to get a lot cheaper than it is right now, or maybe for the next 45 days.
And Mike, we'll end it like we always do. Do you have any risk management tips or marketing advice for the folks watching?
Well, I still think we're going to see a lot of volatility. And depending upon how much of an iron stomach you have, I still think you need to do something. I'm doing options now because I think there's upside in this market, where last spring I was fearing a downside deal, which we ended up having. So I'm trying to do options and leave my top side open here. I don't think you ever want to go without some type of risk management. The volatility, you can see it in the last 2 days. My gosh, there's just been huge ranges in the trading. And I think that's going to continue because you have so much volatility in the world. So I think a guy's got to protect himself as he goes forward.